Hi, I'm James. Thanks for watching. Today we'll be talking about the 5 biggest mistakes that new traders make, and hopefully it's helpful. A lot of these mistakes I've made myself and learned the hard way, so if I can share with others and help them not make the same mistakes, then that's awesome. So I hope you find this valuable and consider subscribing to the channel. We'll be coming out with a lot more content, and if you don't already have a broker, I have links in the description below to Webull and Robinhood. If you use those links, I get free stocks for you signing up with them, and you get free stocks for signing up, and you can get more free stocks whenever you make deposits. Robinhood for me is a lot more simpler. It's easier to use. Webull has a lot more tools and graphs and things to choose from, so some people like them better. Let's get into it. First mistake I think most new traders make, or myself, one of the biggest ones I made, was getting into a stock after it's too late, after it's already ran up. Maybe you see it on the top movers list, you check into it and it's got a good story behind it, and maybe it's jumped 30, 40, 50% in the day. It's tempting to want to get in when you see a stock moving, trending up so fast. You think, surely if I get in, it's not going to mess it up. But usually whenever you see a stock has already ran up like that, you may be too late to get in. You may be getting in right whenever everyone else is ready to take profits and get out. And a lot of people end up left holding the bag, fear of missing out, and jumping into something when it's too late. Usually, once you see the news and the headlines, and the stock's already ran up a lot that day, and then it drops drastically and never returns, or maybe months or years before it ever returns to that high price that it was at. So you have to be real careful about jumping in just because it looks like everybody else is jumping in. One of my biggest mistakes was trying to get into what was a COVID play at the time, with a stock with the ticker CODX. They make test kits. So the story was good. It seemed like this company was in the right place, right time, and it had ran up 30, 40% on the day. So it seems like they're going to be having what everybody needs with the test kits. So I bought in at $30, and then it dropped to like $16. Very next day it was half price. So I learned that the hard way. It did go back up a little bit, and I got out. But it's never seen 30 since then. So that was one of my first and biggest mistakes, was fear of missing out and just jumping in without a clue about the company. So let's get into number 2, panic selling, or selling when the whole market is down. You have a good company. Hopefully you're investing in good companies when you're starting out. It's because the whole market drops. Maybe your stock drops 10, 15%. But pretty much every other stock is down for the day, or down for 2 or 3 days. That's usually not the best time to sell, or that's usually the worst time to sell, because the market seems to have a flow of ups and downs where everything is overbought and then oversold. So if you'll just hold through that, most oftentimes, if you have a good company, once it's oversold, it'll go back up. So just relax and wait for things to turn around. If you want to sell when it's at all-time highs, and then buy back when it dips. Don't sell when it's at a low and then try to get back in it when it's high. That's the opposite of what you want to be doing, obviously. But once you see your stock dropping like that, sometimes it gets a little hard to hold on to it. You want to get out just so you don't lose anymore. You want to be invested in good stocks that you're confident in, and not invested in some garbage stock that you don't know anything about. If you have stocks you're confident in, just starting out, then hold on to it and give it time to go back. This is the best time to be buying instead of selling. In the time when good investors are buying in because everything is cheap, the ones who don't realize it's going to go back up will sell out at these levels. So patience in the market, learning to hold on, even though you're down, hold on, and just wait. It'll come back around. The next mistake that most beginners make is jumping into options, penny stocks, day trading, the more risky strategies of investing way too soon. And if you don't know what you're doing in those, you're really just gambling. You may have some beginner's luck, but to stay in those long term, you really need to know what you're doing. You need to know for day trading how to get in, how to get out, how to manage your risk, where to set stop losses. All those, you need experience. You need, for a lot of it, you need better equipment, better setup to do it and compete with those who have been doing it a long time and they have the best technology and best equipment. If you're just using an app on your phone and trying to compete with some of them, I don't know if you stand a chance long term. For penny stocks, you need to spend time studying those companies, especially if you plan on staying in them long. If it may be a penny stock that you really expect to do well over the next years, but you need to do your own homework. Don't just take someone else's advice. With options, you really need to take time to watch how options prices work, watch the time decay, learn to read the Greeks. For a new beginner trader, I would recommend just staying with the big names that you know, products that you use, companies that have been around for a while. I like growth stocks. I don't really care about dividend investing. Some people like dividend investing, and they like getting those dividends every quarter. Either one of those, strategy, growth, or dividend, it can be safer for a beginner. You're not taking as much risk. You don't need to know as much about the charts. If you bought Apple at any price a year ago, you would still be in the profit, is my point. So at least you would break even or make money on some of these big companies. Personally, I just think staying with the successful companies that have done well over the past 5-10 years, just sticking with those until you have spent time studying the more risky strategies, or if you're going to learn those, just taking very small positions, kind of very slowly creeping your way into it. The fourth mistake most beginner traders make is not managing the funds correctly, not averaging in little by little, buying a few shares here, a few shares later, just going all in at once, and then the stock drops and you could have bought it much cheaper. Sometimes averaging in, the stock goes up, and then if you want to buy, you're going to pay a little more. It happens, but it's better. I would rather do that than to just go all in and have the stock drop and be way down. So it's important to diversify your portfolio. Make sure you're spread out into multiple businesses and not just having everything into one company or two companies or three, but spread it out to a percentage that's not going to hit you so hard if, say, one company gets some bad news, because anything can happen. There's not really any safe stocks in the stock market. There are safer stocks, but nothing is 100% guaranteed. So setting stop losses is important. Different people will recommend different percentage that you want to put your stop loss at. I don't like getting stopped out, so if I plan on staying long and averaging down, even if a company drops, I don't always use a stop loss, but some people swear by them and they won't invest without them, so it's another thing to consider. And the last mistake that I see many making is taking advice from random people on social media, putting too much confidence in a price target set by even the pros, because oftentimes they're wrong. They'll set a price target at 50 when the stock is currently at 20, and the price will go up and then drop back down. So you can't always put that much faith into what they're saying. You just need to do your own homework, and don't trust anybody, because they may have their own invested interest. They may be invested and want the stock to go up or down. So you can't really ask anyone else what to do with your money, because they may want to sway you for their own personal benefit, their own personal gain. There is so much of that out there in the news and chat rooms, social media, even these big companies put out price targets on stuff they're invested in, either lower or higher, pump the stock up and then they sell it. So you have to really watch out, and don't trust anyone. Trust your own homework, your own conviction. Set your own price targets. Get out when you feel like you've made enough profit, or get in when you feel like the stock is on sale. Do your own homework, study their financials yourself. And if you don't feel like putting in the work, then you probably shouldn't be investing your money. If you don't want to put in the work to know what you're investing in. So put in the time that it takes to study, so that you have your own conviction, your own opinion, and you're not just going off of what somebody else said or thinks. They don't really have to pay your bills, and they don't really care if you succeed or fail. So don't put too much faith in what other people say. I see so many on like social media asking what's the great stock to buy this week, and everybody's ready to give their favorite stock of the week. And it is a good way to get some ideas, things to go and look at, do some homework on. But my point is, just don't take everybody else's word. I am not a financial advisor. This is for education and entertainment only. So if you have any questions, or you have any mistakes that you've made that you think might help someone else, comment below in the comment section. We appreciate you watching. Just join us back here next week.